the market rips, it creates huge FOMO because there's so many people, the people I speak to, the family offices, the high net worths, the smaller institutions, the RIA networks, all of those capital flows are basically buyers from 75,000 onwards. And 100,000 is blind panic because they're not traders. They just want confirmation that the thing is trending. And they'll find the narrative will fit it. Price leads, narrative follows, and that will happen. So what happens is it kind of accelerates, which is why the banana zones tends to happen. It accelerates through those highs, and everything gets a little bit crazy because everyone has a total FOMO, and random friends of yours you knew from school 20 years ago start calling you up saying, well, I hear you into crypto. That's all to come.
Today, we're diving into the latest developments in the crypto market. Recently, Bitcoin dropped to $58,000, a dip that worried many investors, but it bounced back quickly, and now it's trading above $68,000 per coin. This fast recovery has sparked a wave of excitement and euphoria in the market. In one of his latest interviews, Raoul Pal shared his thoughts on what he calls maximum pain. But what does that really mean? It's not as bad as it sounds, unless you're a bear. For months now, many traders and investors have been sitting on the sidelines, waiting for a recession or a major market crash to burst what they believe is a financial bubble. But instead, we've been hitting new all-time highs in the stock market. And now, Bitcoin seems to be slowly catching up to the trend. Many investors are waiting for the election results before making their next moves. But this strategy could be a double-edged sword. While they try to protect themselves from a potential downturn, they could also miss out on a powerful rally. According to Raoul Pal, this is the path of maximum pain. Not pain for holders, but for those waiting on the sidelines, expecting a crash that might not happen anytime soon. Raoul also mentioned there's a bazooka of money waiting for the right moment. He believes that once the election results are in, that cash will pour into the market. And when it does, it'll create even more pain and FOMO for those who stayed out. Now, let's listen to some of the key moments from Raoul's interview. And after that, we'll break down what all this could mean for us as investors. Before we dive in, please hit that subscribe button. It's the best way to show me you enjoy this content, and I'll make sure to keep bringing you more valuable videos. Thank you, and let's get started.
I mean, everyone's just so frustrated with this sloppy price action, right? Equities at all-time highs, the macro's good, China's stimulating, everything is in place. The pattern matching versus exactly what happened last year, everything's in place, and the market cannot get out of its own way. The weird thing of MicroStrategy's decoupling from Bitcoin, which is equity flow versus crypto flow, which adds to this, there's something else going on. And then, looking, because I've got an asset management firm that invests in crypto hedge funds, and speaking to everybody, there are no flows because everyone's waiting for the range to break. So there's all the family offices like, well, we just want to wait for things to start being confirmed. And it's the election, we want to see what happens with the election. It's basically everybody's waiting for everybody else. And we don't really have a catalyst. I mean, all the catalysts are in place. It's probably 50 charts of liquidity, financial conditions, historical pattern matching, technical analysis, everything from, if you look at Bollinger Bands of, volatility, all of these things have always led to a big breakout. So you've kind of got every box ticked. I mean, everything. And, China have started to do the whole global stimulus game, and that will spread to everybody. Yes, at the end of the quarter, the Fed saw a draw of liquidity because of the bank funding stuff, but that goes away. So I don't know.
The only thing
for me, it's just a matter of time. It's just really interesting when you see the list of the biggest holders of the ETFs. There's some RIA firms and whatever. Most of it is the converter ARB guys. It's all of them are the ARB guys. So they're either ARBing using the ETF because they can get prime broking on it, which you can't get on Bitcoin very easily. So they use it for prime broking, and then they're ARBing the futures or the perps.
Right.
Yeah.
No actual real new money that's come in yet then?
Yeah, there is some. You can go down the list, but
Yeah.
when you look at it, it's all Millennium, it's all the same players, and they're just extracting cash from the cash and carry. It's just, again, the regulatory issues. I mean, every week there's somebody else being prosecuted. Then you've got the kind of Trump on one side, the Harris administration not making it clear what they're going to do, and the SEC being hostile. So that keeps people back from actually really allocating. It's like, okay, we need election clarity now. You know, the general thesis that I brought about was the fact that we need to refi the debt, and that liquidity has been cyclical and it's been measurable, and we've got a huge amount of debt coming. Yes, GDP growth is decent right now, so that does pay for a lot of those interest payments, but interest payments are very high. So for some reason, not only the US doesn't provide liquidity, because if you go back to the 16-17 bull run, the US had raised rates once, went on pause, didn't do anything with liquidity. The Chinese did it all, and then the UK because of Brexit. And so it'd have to be all of them not doing anything. But the Chinese have already made it clear they're going to have to do something. So that's the difficulty I see is I don't see how nobody's going to do it. Because inflation's imploding in Europe right now. So the Europeans are going to keep going. I don't know. That's the only thing I can see is for some reason that whole liquidity story, the cyclicality doesn't work. But it's been working perfectly since the bottom in 2022. And really, when I look at the patterns and stuff with GMI, it's like I'm complaining because it didn't match last week. Really, with a bit of wiggling around because of flows or whatever, whether it breaks out this week or in 2 weeks' time, 3 weeks' time, makes no difference. But it should be that order of magnitude in terms of time. It's like, it's right here, right now. No, I think everyone's looking for the confirmation of Bitcoin, and then everybody's going to get out the risk curve. So you can see that the market's kind of getting ready to do all this stuff. And the moment Bitcoin breaks 70,000, my only ETH exposure is NFTs. So I've got a lot of high-end NFTs, which are only on ETH. Other than that, I'm a mercenary otherwise. It's like, you know, what's going to outperform? I've been Solana, and then I've been switching towards Sui, even though I'm on the foundation. So I've been granted tokens, but I've actually been buying in the open market because the chart versus every cross rate versus Bitcoin, Ethereum, Solana, and choose your token, and it's about performing. Right, okay, this is the signal that this may be the next chosen one. ETH, I've been thinking through what happened with ETH. So the layer 2s obviously took away from the layer 1. Okay, fine. But what I'm thinking is really being built is something that scales much larger. Solana and Sui and other stuff are seeing the pickup in activity. ETH has basically built out enormous amount of block space. And as the market grows, I think, you know, ETH, because it's security and all of the other stuff, will attract more flows. But it's probably going to underperform this cycle, underperform Solana, but I still think it outperforms Bitcoin. So that means that corporate earnings are still slow. That means people's paychecks are slow. That means the bloke who owns the sandwich shop down the road, earnings are still a bit slow, all of that stuff. When it starts picking up, that compounding effect of the business cycle means more disposable income, means more investing, and then people go out the risk curve. So we still haven't got to that point. So we're still, and that's another reason maybe this whole breakout from the banana zone hasn't happened, is it really happens when the RSM crosses 50 to the upside. That's like a big signal. And we've seen volatility come down, like Bollinger Bands have got to the kind of super low levels.
So that means we're coiling basically in price.
And every time it's got to these kind of levels, we've seen price explosion to the upside. And as volatility comes down, it just becomes super attractive in this kind of stuff. I trade a bit of options, not a lot, but I trade them on Dare a bit, obviously. Look, everything is in place. The only thing that we were talking about this earlier, Dave and I, was like, the concern is we all think it's likely to break to the upside and go fast. And the issue is, where is the capital flow going to come from? If we're stepping away and want to give ourselves a counter argument, is everybody's looking at each other to say, well, when it breaks, the market's going to go higher because it's going to bring in all of the FOMO. But it needs to break higher to bring in the flow.
That's right.
That reflexive thing needs to start. And every time it's got to the top of the range, it's come back down. And now whether that's because of some flow we don't know, FTX estate stuff or whatever it is that keeps slotting at the moment it gets to the top of the range. But I don't know if the market, the crypto market itself, has much dry powder. Everyone's all in and waiting. And there's also some random things like should keep your eye on stuff like Off the Grid, the new big game that's coming. It's on Avalanche. Okay, fine. Avalanche is not a chain that a lot of people use, but this game could be huge. That's a huge influx of people that we're not even looking at. And there's a bunch of the protocols who are building stuff like that. So it's like a mass market, abstracted away use of crypto that drives on-chain adoption, underlying value. So I think that that's the other thing. It's not the obvious, it will come into the Bitcoin ETF and then flow through the market. It could come from a number of different places we're not seeing. Don't forget, at the moment the business cycle picks up a bit faster, it's slow across Europe, it's slow in the US. The forward-looking indicators are showing it going up. I mean, that probably ignites meme coins and brings a whole bunch of normies into meme coin casino, because it's just gamification of attention and internet memes. I mean, they get it. And if their mates we've seen it before in every cycle, whether it was ICOs or if your mate is making a 50x, you are damn well opening an account and going to start trading.
What is the signal? What is the signal you are looking out for to say game on, this is happening, basically, right? Because we've been waiting for this breakout. We've been waiting for this rally for a while now, right? October's here. It's still...
Remember, by the way, the pattern match versus last year is 1-for-1. It was identical.
When did it start?
Forgotten that last year, because last year finished really well. We were like, yeah, last year was great. Good year, guys. We forgot that it went from March till October in this sideways range, identical.
What was the date that it started rallying?
It was like this week or last week. That's what I'm saying.
Right.
Every comparison I look at is like, come on, guys.
I was looking as well in 2020,
Similar period.
its election. Yeah, it was a similar thing.
It's very similar.
Yeah, and actually, I think it was like the end of October, we actually started to get a rally.
2016 as well.
You can look at the average mining cost at this point, and we're moving beneath the average mining cost, depending on where you're at in the world, of course. 2020 had the same period. We were just moving beneath the average mining cost in 2016 as well. So the bears are currently saying we need to go to 45K. But if we go there, the market is in serious trouble. Miners will fall out. Hash rate will probably need to go down. Otherwise, it's just too costly. So we need to go up. And in terms of comparison, it's just the same period. And whether or not it's going to be this week or next week or end of November, whatever.
I actually as well, everyone keeps talking to me about this 45K level, and it reminds me actually after the ETFs and we broke below like 40K and everyone was talking about the 25K and like all this stuff, and then that's again where I think there'll be pain, because I think people generally have almost an arrogance that, oh, I'm going to pick this up at 45K, and then all of a sudden we go 65, and then the pain is actually the chase. Look, we've never missed it.
The market is, in option terms, short the upside. You know, if the market rips, it creates huge FOMO, because there's so many people, you know, the people I speak to, the family offices, the high net worths, the smaller institutions, the RIA networks, all of those capital flows are basically buyers from 75,000 onwards.
Yeah.
And 100,000 is blind panic, because they're not traders. They just want confirmation that the thing is trending.
Yeah.
And they'll find the narrative will fit it. Your price leads, narrative follows. And that will happen. So what happens is it kind of accelerates, which is why the banana zones tends to happen. It accelerates through those highs, and everything gets a little bit crazy because everyone has a total FOMO, and random friends of yours you knew from school 20 years ago start calling up saying, well, I hear you into crypto. That's all to come.
Then there you have it. This was Raoul Pal's analysis and opinion on the current state of the crypto market, global liquidity, and where he believes things are headed over the coming months. His outlook is bullish, and he thinks we are about to witness one of the largest upward moves in the history of cryptocurrencies. This, of course, would be maximum pain for all the bears expecting prices to fall, or for those still sitting on the sidelines waiting for the perfect time to buy, which might never come, leaving them out of some incredible potential gains. What do you think? Please let me know your thoughts in the comments below. I'll be reading each and every one of them. And finally, if you found this video helpful, don't forget to hit the like button and subscribe to this channel for more videos like this. Thank you very much. We are Wealth Wizards, and we hope to see you soon in the next video. Goodbye.